Well, good morning, everyone. We barely have a quorum, but that means we can begin. First item on our agenda this meeting is to call the meeting to order. Item number 2 is to approve the minutes of the meeting of March 9th, 2023. We have a motion and a second. Please record your vote. Item is approved. Item number 3 is the consent docket. We have 2 items we can take with one motion. Have a motion and a second. Please record your vote. Item is approved. Item number 4 is to ratify approvals. We have 3 items which we can take with one motion. We have a motion and a second. Please record your vote. Item is approved. Let's see. Item number 5 is to approve the claims docket. We have a motion and a second. Please record your vote. Item is approved. Item number 6 is to approve the following applications for service retirement. We have a motion and a second. Please record your vote. Item is approved. Item number 7 is to receive report of death, authorize payment of the $5,000 death benefit, and approve continuation of pension to spouse. We have a motion and a second. Please record your vote. Item is approved. Item number 8, receive report of death, authorize payment of the $5,000 death benefit, and authorize secretary to make necessary changes to conform on the following. We have a motion and a second. Please record your vote. Item is approved. Item number 9 is items for individual consideration. Item 9A is resolution authorizing the chair or designee to sign reporting agent authorization form, allowing Automatic Data Processing, Inc. to file tax information with the IRS on behalf of the Oklahoma City Employee Retirement System. Does anybody have any questions on this? Hearing none, Chair will entertain a motion. We have a motion and a second. Please record your vote. Item is approved. Item number 10 is to receive the investment consultant report. Good morning, Jason.
Good morning. It's quick. Regina, can you pull up the market snapshot? Didn't hand this out. So just a few comments on the markets, I guess, since last I was here, last month, following the collapse of Silicon Valley Bank, we saw quite a bit of turmoil in the small cap sectors. You'll see there on the left side of the page, small cap index down about 5% for the month, where every other asset class was positive. I'm not sure we talked about this last month, but I think it's important for the U.S. trustees to understand the difference between The cash that is bank deposits at a bank like Silicon Valley Bank, that is when depositors deposit cash in a bank deposit account, up to $250,000 is insured by the FDIC. Beyond that, it's not. And those assets technically are the bank's assets to invest or lend as they see fit, and they have an IOU to the depositor, which is different than the cash at your custodian. So for the pension trust, the cash that is held at Northern Trust, whether it's cash that you see on the ASAP at the end of the month, that's sitting in what we call the cash account, or cash in manager accounts, on a daily basis, that is swept into what we call a sweep vehicle, which is a money market fund managed by the bank that is yours. You own that. It's held in trust and custody at your custodian bank. So it's not an asset of the bank to be invested or lent out that could be susceptible to issues of you not getting it back. So there is certainly a difference there. The issues around Silicon Valley Bank, while appear to be, at least for the moment, somewhat isolated, they had a very homogeneous deposit base, a lot of venture capital firms in Silicon Valley, and when the news started spreading that they might be in trouble, you saw everybody wanting to get their money out. Most of the banks, we don't believe, have that kind of deposit base. That said, with rates continuing to rise and the deposit rates that banks are charging, particularly regional banks, there could be some additional turmoil. I think for the pension fund, the important thing to keep in mind, number one, is that's not how your cash is held. Secondly, from an investment standpoint, that's why we have diversification. Diversification across asset classes, diversification across managers, and managers that are allocating across multiple sectors, industries, and positions. Not immune. You're going to have some exposure there. In your Silicon Valley Bank represented about 0.5% in the S&P 500, so there's some exposure there. And other regional banks that primarily we would see in your small cap managers, particularly Earnest, and you saw Earnest down about 5% for the month. But I think just worth noting. Was asked before the meeting, do we think there's going to be a recession? I think that question has been asked for the last 15 months. It could be asked forever. Our expectations are potentially for a mild recession, although I think it's important also to keep in mind, while you're seeing layoffs in the technology sector in particular, the number of jobs gained in the technology sector over the second half of 2020 and 2021 still dwarfs the number of layoffs that we've seen so far. And across the U.S. economy, we actually saw an increase in payrolls and jobs in the month of March, up 300,000. So the unemployment numbers or the employment numbers are still fairly strong. Our issue is we just don't have enough workers or skilled workers. So the folks that are getting laid off are either finding new jobs in other places, but we're still having some challenges in other parts of the market, the service sector in particular. From a valuation standpoint, there in the middle of the page, we really view U.S. Domestic equities as what we would call fairly valued. They're not cheap. We've talked about this over the last several months, despite we've seen things come down in 2022. A pretty decent bounce back. The S&P is up about 7.5% through the end of March for the first quarter. Much of that is isolated in 4 or 5 stocks. Some of the things that were down the most, some of these mega cap growth names, have bounced back quite a bit as rates, intermediate to longer term rates, have come down quite a bit, despite the Fed's raising short-term rates. We've seen markets really trading on that. And the Apple, Microsoft, I think Apple's now 7.5% of the S&P 500. It's I think a pretty large representation in the index overall. As we look at, go to the ASAP and looking at your portfolio in terms of the asset allocation, at the broad asset class level, we're relatively in line with targets. Slight underweight to equities by less than 0.5%, slight underweight to fixed income, but we have about 1.7 in cash. We've been carrying a little bit more cash, and right now that's actually not detrimental. You're getting a 4.5 to 5% return on cash currently, and so we would include that in fixed income, which would get you right at your target. Effectively in line with the target in real estate, although we continue to be underweight opportunistic real estate, and that's an area that we would expect to see capital calls going forward. The Starwoods and Angelo Gordon and Blackstone funds that you made commitments to in the last, in 2022, we would expect to see capital calls there. One thing that I will point out, the large cap equity is overweight within equity, and that's been intentional because private equity is quite a bit underweight as we're building that allocation up. As we look at results, the total portfolio results are lagging the policy index. That large cap equity allocation, while large cap has done well, your large cap allocation has trailed the benchmark by a bit. And because of your overweight, that's contributing a little bit more to that dispersion relative to the benchmark. As you look on the next page, your large cap equity on a year-to-date basis, net of fees up 7%, so it's one of the better performing areas in the portfolio, or it is, with the exception of non-US, but the S&P 500's up 7.5%. A big part of that is, as we've talked about Intech, while you have two managers, a passive strategy meant to replicate the index perfectly and just get the return of the benchmark, the Intech strategy, while a benchmark risk controlled, they're not taking major deviations from the benchmark. It tends to overweight the smaller cap stocks in the large cap universe that have a little bit more volatility, and that's been detrimental, really, going back now a year and a half. It's creating a bit of noise that I'd say I want to take a look at that, maybe and come back with a little bit more detailed analysis next month as to whether or not we should maintain that. We've had this structure for some time. It's a bit disappointing to see that kind of dispersion in an area where we just were really trying to get the return of the benchmark. So we'll have more discussion on that. Small cap on a year-to-date basis down up 2.8%. The month of March was difficult within small cap as regional banks sold off. International equity is a nice quarter. Your international equity is up 8%, trailing the benchmark a little bit. Issues there are the volatility we've seen with the bounce back in the momentum growth, both domestically and in the non-US. You have more quality in both Harding Loevner and Lazard. They're not going to be up as much when the market's really running, and so we're comfortable there. And then finally, the fixed income portfolio, you see a nice quarter up after a year where fixed income was down about 13%. What's happened in the quarter, rates have come down as interest rates have, intermediate to longer term rates have come down. The 2-year Treasury moved by about 150 basis points, or 1.5%, came down after the Silicon Valley Bank issues, like in a 2-week period, and that was close to a 40% decline in that rate, really pushing up on the bond prices. The 10-year was down about 60 basis points. Western, your core plus manager, they had been adding some duration in their portfolio on the long end, with expectations that rates could be coming down and potential recession or mild recession sometime this year. And you've benefited from that in the quarter, a little bit of a headwind on a trailing one-year basis. Next month, we do have a few private equity recommendations. As we've increased the private equity allocation from 10 to 15% and lowered the long-short allocation, we will continue to make commitments there. I anticipate we'll be talking about a couple of venture strategy and a small buyout strategy to continue to build out and complement your portfolio. Questions?
Not necessarily on this, just on something else. Did you file your ADV?
Yes,
Okay.
we did.
Any major changes on the ADV that we should be aware of?
We're very boring, Randy.
That's good. We like boring.
No changes. No changes in services or what we do. The only changes were assets, assets up, number of clients, and a couple of promotions this year. Haley Reeves was promoted to managing director. I think many of you may know Haley. And Roger Willis was promoted to managing director. So changes to their titles in the ADV, but nothing else.
Okay. Could I get a copy of that?
Sure. I think we sent it to Regina. Yeah.
Okay.
Okay.
Any other questions for Jason? Thank you, sir.
Okay. Thank you.
Chair will entertain a motion to receive the investment consultant report. I have a motion and a second. Please record your vote. Item is approved. And final item, number 11, is comments from board, staff, and citizens. Okay, there's your chance. Hearing none, we are adjourned at 10:17.
Great job.
Thank you, everyone.
Nighttime. I was having a stroke there.